Good morning, everyone, and welcome to our webinar this morning. Again, my name is Courtney Austin, and I'm the Marketing Coordinator here at AIM. Today's webinar will be recorded and will be posted on our website later today. This does mean that everybody will be automatically on mute to ensure that we get a quality recording. If you do have any questions throughout the webinar, please feel free to type them into the chat box, and we'll have one of our marketers reach out to you individually after the webinar to answer them. So I'll go ahead and hand it over to Nicholas so we can get started. Go ahead and take it away, Nick.
Thank you, Courtney, and good morning, everyone. Thank you for taking the time out of your busy days to be with here this morning. Today, we are joined by LifeSecure's Senior Regional Sales Consultant, David Coghill, as he goes over some of the great ancillary products that LifeSecure offers. David has helped us out a bunch of times in the past, and we can't thank him enough for what is sure to be a great and informative webinar. So without further ado, take it away, Dave.
Good morning. Thank you, Nick and Courtney. Really appreciate you allowing me to present this information. It's been a great partnership with AIM, and what I plan to do this morning is, I know it's a busy time of year, what I've created is kind of a quick overview of our ancillary products and also get into some of the life products that we now have available. We do have ongoing national webinars that dig a little bit deeper into each product, but I found that these webinars, this time of year especially, can be more useful, more efficient. If I kind of create highlights of each product, if you're familiar with Ancillary and Life, most of you will be able to identify some of the positives and unique features that really make us competitive in this landscape. So once again, I know Courtney mentioned it, but please use the chat box for questions. No questions are off limit. I get all kinds of questions every day, and it's good to be informed about these situations and these unique products that we've got. So my contact information is certainly showing on the screen. Hopefully you can all see it. Take a picture of it, write it down, whatever you'd like to do. Feel free to reach out to me. I know the AIM individuals are also available too. So with that being said, I'll go ahead and get started here. So the agenda quickly, what I'm going to do is give you an overview of some of the new and enhanced products that we have. This is what we term really our wheel of products. So this will be the agenda. I'll be covering all of these products with the exception of long-term care. You're probably familiar with us if you've worked with AIM, that we continue to be in the long-term care worksite space. Kind of busy this past year, certainly with the Washington mandate. So I won't be talking about long-term care, but certainly the other products I will. So a little bit about LifeSecure. So we're majority owned by the largest health plan in Michigan, actually the United States, since 2006. We got into this space because there's certainly a need with high deductible bronze and silver plans out there, but also some of the benefits at worksite have been stripped away. So we're also in the worksite, or what a lot of people term the group. The beauty of our products is they're all portable, they're individually based, so people can take them with them should they leave the company. So we're in the individual market as well as the worksite as well. So we are definitely fast growing, certainly financially strong. Technology has allowed us to be very successful during the pandemic and some of the things that we've all faced. So that continues to evolve, but all of our applications are electronic. It can be text signature, email signatures, those sorts of things. So we're a national company in 49 states, and kind of a feather in our cap is we've been recently ranked as a top 3 carrier for individual accident sales, according to LIMRA. So we enjoy that success, and hopefully you can see why. So I'm gonna get right into it here. Our accident product is kind of our flagship product in the ancillary space. It comes with an accidental death benefit now. Issue ages are 18 to 74, but what's new, it is guaranteed issue and guaranteed renewable to age 85. So there's no underwriting. If you present an application to an individual, as long as they're between the ages of 18 to 74, they're going to get a policy. So that's both in the individual and the worksite space. The accidental death benefit, $10,000 for the primary and secondary insured, and $5,000 for each child in the household should they pass away from an unfortunate accident. We've increased the time frame to receive initial care. Most people who have an accident, they're going to have those symptoms in the first 24, 48 hours, but we've now extended that to 1 week. So that's a good thing. We've also enhanced our deductibles. So you can get a zero deductible option plan or $500. And this product continues to be 24/7 on or off the job. So it really has been a nice feature for those worksite benefits or people working maybe in a high risk, construction, roofing, whatever the case may be, police officers, so on and so forth. So there is no job exclusion, just a professional athlete. So how does it work? And I know I'm moving pretty quick here. It's essentially choose your annual benefit bank, which replenishes every January. So for individuals, it's $2,500 to $15,000, up to $25,000 for couples and families. So if it is a couple or family who are on the same plan and they have $10,000, $15,000, $25,000, they can all chip away at it throughout the course of that calendar year, and then it replenishes back to the original writing amount. So it's a really nice feature. There are only 4 rating tiers, so it's not age-based other than those issue ages that I mentioned. It's an individual and spouse, single parent with kids, or a family plan. So pretty easy to rate it out. And the bigger thing, and I think the reason that brokers and agents enjoy this product, it's reimbursement of actual expenses. So let me give you a quick example. So in this plan, Donna chooses a $10,000 benefit bank. So she has an accident. She has a deductible of $500 to supplement her medical plan. So it works right alongside health insurance or not. It pays separately. Okay, so she broke her collarbone while skiing with friends, required immediate medical attention with reimbursable medical expenses totaling $8,800. So some of the competitors out there have scheduled benefits. So this accident may have included an emergency room visit or an ambulance ride or an overnight stay in the hospital, okay? Ours simply pays based on what those expenses are, where others are scheduled all along the way. So it really makes our contract very rich, very easy for you to explain to a consumer, thus the reason that our payouts are much richer. So in this case, $8,800 less a $500 deductible would be $8,300 paid to Donna. So that would take care of some major deductibles, maybe out-of-pocket expenses for a couple days lost wages, maybe some care at home, whatever the case may be. So it can be used however they wish. This is cash going to the insured. So some example premiums, and I'll be quick on this. Let's say that $10,000 annual benefit bank for the individual for a $500 deductible, in this case Donna, in the upper right there, $30 a month. So that's a pretty good feature if somebody selects a bronze or silver plan or simply doesn't have coverage. So you can see the rest of this, and once again, we can get this information to you, but we're very, very, very competitive in this landscape. Common claims, slip and falls, burns, cuts, animal insect bites, exercise injuries. We've seen a ton of them during the pandemic. A lot of people are working out at home, unfortunately sustaining some injuries, auto accidents, and so on. On to the next product, hospital recovery with observation coverage. And that's one of the bigger changes here. So once again, I'm going to move quick. Issue ages are 18 to 85, a little different in California. And this is a lifetime guaranteed renewable product. Coverage for treatment in an observation unit or admitted. So now we have that feature because if you're in this space, a lot of people are in the emergency room and they're placed under observation for 24, 48 hours. A lot of plans out there don't pay on that. We do now. So once again, this is a lifetime product. So once somebody locks in their premium, whether it's 18 to 85, that's their premium. Does not go up based on age. Now, the issue ages are a little bit different. We introduce age bands and certainly riders to enhance the daily benefit amount. And I'll do a quick on the next slide here. Optional riders, ambulance, ER, major diagnostics, so on and so forth. So there are guaranteed issue opportunities as well. On the work site, guaranteed issue for a $200 daily benefit amount. As long as somebody's working 20 hours a week at that business, at that location, they can get a policy. For individuals, guaranteed issue for applicants ages 64.5 to 65.5, a 1-year window at any ages. So those are nice features. Again, I'm not digging too deep into this. You want to check your state to make sure some of these optional riders, guaranteed issue components are certainly viable. And I can do that for you. So how does it work? Pretty easy. Once again, we build these products with ease in mind. It's simply a daily benefit amount. Once again, replenishes every January. So it's multiplied by 35 days. So if somebody takes out a $500 daily benefit amount, they have $17,500 of annual benefit bank of hospital recovery. So that quick example, Cindy selects a $500 daily benefit. She's later hospitalized for 4 days after back surgery. Upon discharge, pretty easy math, 500 times 4 days, we would send a check to Cindy for $2,000. So pretty easy to understand. Some of the rates, once again, I'm going to be quick here. Let's take a 50-year-old individual with a $100 daily benefit amount, be $1,260 a month. Let's kick it up to $500. A 50-year-old would be about $34 a month. You can see the other increased ages get a little bit more expensive, but it certainly depends on what they have in place or not that would fit. But it would go all the way up to $900. Typically, people are selecting around a $400 daily benefit on average over the course of the past couple years. So moving on, now we're into critical illness. So critical illness, what we've designed are 9 major diseases that all fit into one product, and I'll explain that on the next couple pages. So issue ages 18 to 70, guaranteed renewable to age 75. Once again, California, a little bit different. So if you're selling in California, just be aware of that. Reach out to me, and I can certainly help you with that. Kids in the household get $2,500 benefit at no additional cost. So the benefit amounts range from $5,000 to $50,000. The rate structure, now we've got nicotine, non-nicotine, male, female, individual ages that come into play. So automatically included benefits are return of premium benefit. Should the primary insured pass away, we return all premiums paid into the policy back to the beneficiary. Now, it would be any less claims paid, but that's a nice feature. There's an annual health screening benefit. So there are about 60 different health screening benefits that would qualify. The insured would simply send in a quick receipt, and we'd send them up to $50 per year. And a lot of parents are taking advantage of this with some wellness checks with their kids. So keep that in mind. It's a nice little competitive advantage. Reoccurrence benefit of the same disease, and I'll explain that. Subsequent diagnosis of a different disease. So this truly does continue to pay through age 75. There are additional benefits. So how does it work? So this is really a reflection of what is the benefit amount and the specified disease. So the big ones, heart attack, stroke, invasive cancer, end-stage renal failure, major organ failure. Those are the big ones. So if somebody selects a $10,000 benefit, they have a heart attack, we send them a check for $10,000. Should they have a stroke later on, as long as it's separated by 6 months, we'd send another check for $10,000. So what we've done is really built a package of a lot of major diseases out there. I know that the competitors, a lot of them have individual plans that address each of these diseases. What we've done at LifeSecure is keep it all intact. It really is an umbrella of protection here. Now, let's say somebody has a second heart attack a year later. We would pay again, but at a 50% rate. So that $10,000 would be paid at $5,000. And any subsequent heart attack, unfortunately, would be paid at that rate. But it continues to pay throughout the life of the policy. Now, skin cancer is circled in red. It's the only one and done. It's so prevalent out there that we just have to insulate ourselves. And unfortunately, it is just 5%. But some of the others, you can see percentages attached to them. The end-stage renal failure is brand new. It used to be at 25%. So I know I'm moving pretty quick. If you want a little bit more detail on this, you can certainly reach out to me. So what does it cost? So a quick example, that $10,000 benefit for a male non-smoker, let's say a 50-year-old, would be about $30 a month. If he went up to $25,000, it'd be roughly $62 a month. So a lot of people are buying this, especially with history of heart disease, cancer in their family, unfortunately. But it is a good product to sit down, discuss out of pocket. You can imagine the out of pocket for a family who suffers someone coming down with cancer. So we probably know somebody, maybe we have experienced that. It's a great product for that. It takes the edge off, obviously, with that financial difficulty in the household. So that is the end of the ancillary side of things. I'm going to move you into life insurance now very quickly, and hopefully we're still doing good on time. So we've recently partnered with a company called Lumico, and it gives you exclusive access to their final expense and term life products, which are not otherwise directly available to agents. So Lumico is a Swiss Re company. I think many of us have probably heard of them. Fortune 500 company since 1865, A-rated. By the way, our parent company at LifeSecure is A-rated, so feel good about that. But term life, final expense, what I'm going to do is dig a little deeper, but keep it abbreviated. So term life. So our term product now through Lumico is 10, 15, 20, and 30 years. Certainly level for that period of time. But they can keep this policy through age 95. It would become an annual renewable term. Certainly the premiums would change each year. So the issue ages from 10 to 20 are 18 to 65. 30-year term ages 18 to 50. Face amounts go up to $500,000. We're keeping it very simple. Rate class is simple, once again, tobacco, non-tobacco. It is gender specific. One of the bigger things that Lumico has and does not have is a policy fee. So that keeps the premiums low and very competitive. Certainly that 2-year contestability period is in play. And then you can buy some optional riders of accidental death benefit, waiver premium, and certainly add kids to the policy. So the underwriting process, it is all electronic. It's an instant decision and immediate coverage. About 95% of applicants are approved at point of application. So there's some initial knockout questions, but there are only a few questions that are underwriting related because the electronic feature of a prescription history scan and an MBR report say a lot. So it allows Lumico to move forward on about 90% of their applications. So it's text signature, email signature, or simply a quick approval where you can type in the individual signature. So you can either do what we call a self-serve and email the application to them. They can complete it. They can submit how they'd like to pay for it, sign it, and it's determined at point of sale whether they get a policy or not. So we've been really pleased with what has taken place so far. So check us out on that. Final expenses, the final product here. So issue ages 50 to 80 for preferred and modified classes, 50 to 85 for standard. The policy expires at age 121. That's a pretty hefty number there. Minimum face amount is $5,000, and then you can see the preferred levels up to $50,000 for ages 50 to 60, certainly down to $20,000 for 76 to 80, and then 30 for 71 to 75, so on and so forth. Standard 30,000, modified 15,000. The rate classes are kept very simple: tobacco, non-tobacco, and then we have unismoker in there. The rates are gender specific. Once again, no policy fee. Optional riders include accidental death, and then that 2-year contestability period. Once again, pretty much the same. 90% of the applicants are approved during the application process, which is online. So there's an instant decision. They can get a policy today. It is a prescription scan, but Medical Information Bureau scan comes into play too, and it makes sense with the older generation coming into play with a final expense product. But in most cases, we're able to get them a policy today. So once again, check us out on that. To kind of wrap things up here, we're known as at LifeSecure as a really simplicity of doing business. We really try hard for that. Ease of quoting, illustrations. If you have a website set up, we have a direct buying link that's tied to you, the client. And in today's world, people are used to point and click. It's simply a point and click scenario. On our ancillary applications, you know, it's all text, email, screen share, or the direct buying link, whichever you prefer. If it is a worksite or group case, we have an enrollment platform already at LifeSecure. It's our own self-serve, or what we call a portal, where it is live and people can once again point and click and buy our products on the worksite. There are no application fees, several payment options. We're very viable in this space with EFT, payroll, credit card, etc. And we are paperless. We have a lot of marketing and co-branding opportunities. So if you've got an agency and you want that to be co-branded on literature, we can do that for you. We've got YouTube videos. Reach out to me if you'd like. I can provide, you know, some scenarios for you, allow you to see some of the marketing features we've got out there. So with that, I want to thank you. I want to thank AIM for allowing me to present this. Once again, great partnership. Feel free to reach out to me with any further questions. There's my contact information. And I thank you for your time today. And once again, Courtney and Nick. Appreciate it. Thank you very much.
Well, thank you so much, Dave, as always. As is typical with these webinars, we here at AIM will be reaching out to you later on today for any follow-up questions. And as a reminder, our next webinar is going to be next Wednesday at 9 a.m. Pacific Standard Time, where Anthony will be taking a deeper look into LTC hybrids. Again, we'll be calling you guys later on today, but if you have any questions before then, feel free to give us a call. 800-672-7202. Thanks again, Dave, and everyone for joining us today, and I hope you guys have a great day.
Thank you very much. Take care.